Hello, friends, and welcome out to Trading Justice, a financial markets podcast where we get together weekly and have conversations about what's happening in the markets from a price action perspective, technical analysis, fundamental analysis, news, just trends, whatever's going on that's grabbing our attention that we want to talk about, we bring it to you. And then occasionally we get together and have, some special episodes like we're going to be having today. And we're going to have our predictions podcast, something we've been doing annually since 2014, where a couple of coaches at Tackle Trading are going to join us and talk about what they're projecting for 2026 as we get ready to ring in a new year with just a couple of days away. I am your host. My name is Coach Tim Justice, and we've got Matt and Mark here as well. Before we get into the questions on the predictions, let's bring those two men in. Let's start with you, Matt. How you doing today, sir?
Tim, doing absolutely fantastic. It's been a great holiday season. Christmas was fantastic. Hope everybody had a beautiful and amazing Christmas. And enjoying the slow grind here the last couple weeks of the year to get the batteries recharged to have an absolutely amazing 26.
I am jealous of people who get that slow grind. It feels like even when I'm not working and I actually take time off, I'm always like fighting traffic or I'm out in the slush and snow and all that kind of stuff. I just need to just chill, right? Just kind of take a
Your
few days,
Justice,
read a
we
few
don't really know
books.
how to chill for no, we don't put it down. Slow grind at the end, it still means work. It just means slower grind.
I need a vacation from my vacation, Mark.
Uh,
That is what it is. Mark, how you doing today, sir?
I'm excited. The podcast prediction show is my favorite one of the year. I,
I
I
was going to
love,
say, is there anyone that is even close for you?
like I love the prediction. I would do
Uh,
prediction podcasts like every 2 weeks. I just love and what it is I love the process that my mind goes through. It becomes
yeah.
very stimulated. I just love the process leading up. Interacting with my two brothers, eh, I could, whatever. But the process leading up to the podcast, I enjoy that very much.
Before we get into predictions, I mean, I'm mad. Do we need like some compliance drop that these are not like guarantees for anybody out there?
No, they're
We
like
don't
guarantees,
No,
actually have a.
100% gonna happen.
I don't know. If you looked at our predictions last year, you might as well put them in cement. They were pretty spot on. But no, we do predictions as a way to have some fun more than anything. But really kind of to talk about next year, to
Yeah,
kind of work through the process, to think about, okay, what's the environment we're dealing with? What's the environment we're going to be dealing with next year? Just it puts the analyst hat on, and you really start trying to understand where we're at, where we're going, and what can drive price in that arena. I think of the S&P, I think of gold, I think of silver, I think of Bitcoin, all the things that we're going to predict this year. And like every year it goes, like it's damn near impossible to try to understand where the end of the year is going to be. The
Mhm.
amount of themes and variables and earning seasons and like for example, going into this year, we knew there was going to be some tariff induced volatility, but nobody could have predicted the path. Like in terms of all the alleviation, the different changes. I mean, tariff policy changed like every other week for 6 consecutive months. How do you predict that going into this year, other than knowing that the president believes in tariffs? You're going to have some issues with the market. How's the market going to respond? So yeah, disclaimer aside, this is for fun, but we also take it serious.
A little bit of both is always a good thing. A little fun, little seriousness. Let's have some right here, right now. Let's get into it. Let's start big picture and let's start with the most important question, just the broad market here, the
Yeah.
S&P 500. And Matt, I know you got your chart up, but I'm going to put Mark on the spot first here. Mark, where do you have the market finishing the end of 2026?
6,800. Have it slightly down. This is one I've been wrestling with for weeks because I'm actually fairly bullish. And I actually, like, as far as a narrative standpoint, I don't see a recession in 2026. I don't see inflation being, problematic. I think we have institutional support for markets, administration. I think Fed policy is going to be accommodative. right? It's already started that process. And most importantly, I think earnings are going to be solid. And one might ask, well, how in the world could you even predict you're going to be a percent down? Because 6,800 is what, like 2% from here,
Mm-hmm.
right? So about 2% decline, and I could have easily said it 1% up, but I wanted, I put the 2% decline because I think the market's going to be choppy. I think the market is going to have a version of what it's had for several months now, right? Several months we've had, a generally choppy environment. Now, so we have some positive things in my view, in which, you know, foundational things, earnings is kind of that chief cornerstone. I can't get my head, and this is what I kept coming back to, right? Because we have higher valuation, right?
Mm-hmm.
Not the biggest impediment to upward price. I mean, markets have shown that for 15 years, right? That if they have a good narrative, they can do that. Now, and that's where I have start to run into some problems from a narrative standpoint. I think we're going through a transition on narratives on AI. Not that AI is not real, not that AI isn't going to produce, good gains and increase margin for your average company. But I think the days of CapEx spend are over. I think we're transitioning to a show me the money phase of the market. And I think that is going to be tough on tech companies specifically. Like your average random industrial or your average random financial, I think you can have some pretty good winners, stock picker market style. But I have the tech sector taking the year off, essentially. Not dramatic, huge collapse, bear market stuff. Basically, as we transition on this narrative on tech with legitimate questions taking the year off. And those legitimate questions are, who are the AI winners going to be? Markets and tech in particular have not traded well since Google came out with its news. They haven't traded well since then, right? Tech has been very sporadic in its price action. I think that continues until there's clarity. And the problem is, who are the AI winners going to be? That's a big freaking question, right? That might not be resolved in the next year, right? And so having tech take the time off, I also see that there be problems, and this could be from an institutional starting at the White House level on actual support for AI. They say all the right things, right? But where are our nuclear reactors? Where's our commitment to energy? Where's our commitment to keeping up with China? Where is our, universal AI policy? I hear the token comments. I and then I'll see 50 other things that are unrelated coming out of the administration. Until that changes, as we're changing this narrative, any question to AI on energy, any question on CapEx spend, I mean, these are all going to be like not bear market material, but maybe chop material. And so that's kind of some of my thought process. I think a lot of the fundamental things are healthy in the market, but I do think this transition from, hey, AI, CapEx, to who are the winners and losers, I think that causes tech to take the year off. And I think that causes the market to take the year off with some select winners in certain areas of the market.
2 to 3% fade is, there's a lot of paths that you can get there too. So, kind of a safe play there, in my opinion. But Matt, what do you think? What's your read on the market here? What's your prediction for
I,
2026?
I think with everything Mark said, I have to question his prediction. He talked about earnings being good. I certainly agree with that. I don't see an earnings recession this year. Far from it. We've seen it. We've seen profit margins expand. We've seen EPS growth expand quarter after quarter after quarter. We'll start our fifth consecutive quarter of double-digit growth, most likely next quarter. So I don't think there's a lot of concern on the earnings side of the equation going into next year. He talked about, fiscal accommodation, both from the Fed. I certainly expect a more accommodative, i.e., dovish Fed next year than this year. That's certainly going to be a card in the bull camp going into next year. And you're most likely going to get a Trump selected central bank president in May of this year, which is most likely going to propel more rate cuts coming into next year than what is anticipated. But it's not just the monetary side. The fiscal side is extremely dovish right now. You got, the Treasury Secretary Bessent currently doing QE. You got the Fed now embracing QE. And so I see an accommodative Fed for the most part. GDP, Mark talked about GDP expansion. That's certainly expected as the AI build out continues to fuel all growth in the economy. And so I look at that and I'm like, okay, all of that's bullish. Like all of that's rip and roars 60, 7,600, 77, 78, 79. Let's talk 8,000 on that. And then he, talked about concern on the AI trade, and that's certainly understandable. And he's right in some regard, and I disagree in others. He's right on the fact that the CapEx spend is not the fuel that fuels the fire right now. But I also think there's a mistake in assuming that the narrative's changing means the AI trade changes. No, we're going through a different evolutionary period. I certainly agree with that. But Mark, for all the concern on CapEx spend still going up. For all the concern on the government not backstopping the AI trade, they haven't needed to backstop the AI build out as of yet. And the simple reality is, as we go deeper in terms of the AI build out, it's going to be less on the things that you have concern about. Your concern on CapEx is all, and about these companies being able to monetize their CapEx spend is all about the LLM side of the equation. Mark, the LLM side, and Tim is the public facing side. What if we get further advancements on robotics next year? What if we get
Mm.
further advancement in the AI trade not just being about LLMs and what OpenAI can do from making more money on the subscription side of it? I see robotics taking a leg up. I see the AI trade expanding, and I think we're in the third year of the AI expansion. I don't see that stopping. The momentum has changed, no doubt about that. But I think if we even start sniffing getting behind China, there's billions and billions and billions, if not trillions of dollars that the U.S. government will do to backstop. So, and you're right, we are behind on certain infrastructure build out on the nuclear side of the equation, but and China has a leg up there, but we're going to put the foot to the foot to the pedal, and we're going to slam that. So I certainly understand the concern, but I can't say in the middle of the most important advanced technological build out in human history that in year three everything's going belly up simply because the LLMs aren't exactly what we need them to be right now. And so I don't see the AI trade dying next year. I just don't. Despite everything Mark said about the AI trade this year, tech still lit. Like the AI trade still dominated the entire year up until the last month or so, with the entire market kind of going up and down a little bit. And so I certainly, understand his concern on the AI side of it. My concern is on the valuation side, is where my concern is. It's not about whether or not growth is going to happen out of the AI. I think it's fundamentally ridiculous to suggest that growth will not happen out of the AI trade next year. That doesn't mean price follows suit. It just means there is a growth narrative. It is extremely strong. The only question I have is, does the high valuation we're starting with, can the growth narrative overcome that? And that's a concern I have. Right now, the Schiller P ratio is at 40. The all-time high is like 48. Last year, we were starting at the Schiller P ratio at 35. And so we're starting this year in a fairly elevated situation. But I still believe in the growth narratives. I just got done with my entire research for the Tackle 25 and very excited for that list. And it stood out to me. Slight elevation on valuation, but growth narratives that are extremely strong with profit margins that are expanding. And that's the thing about the AI trade that we haven't discussed yet, because we've been talking more on the AI trade about CapEx and the fuel for the fire. But what the AI trade's really done is allow profit margins to expand outside of the AI trade. And so I saw that across the board in my research for the Tackle 25. Cyclical components that have less input cost and a higher output. That's all AI efficiency. And so even if the AI trade takes a step back this year because of what Mark said on the CapEx side of the equation, you're still going to see profit margins expand as companies can produce more with less input, i.e., produce more output with less labor. And that's going to, like we saw the early beginnings of that this year. That's going to continue to expand next year, the year after that, the year after that. And so regardless of the CapEx side, which I do agree with, I see profit margins expanding, and as profit margins expand, I see price expanding. I'm going to lock it in at 7,800.
7,800. That puts us about, well, what are we, 1,000 north of where we're at right now. So
It's
that'd be about
about,
a
yeah, it's
12% gain.
about 12, 13% is where my head's at. Certainly higher than the average than chalk. I'm higher than chalk, but less than I was last year, but I'm around 13%.
In the last 20 years, I had to look up a data point here, Mark, for you. In the last 20 years, there's only been one year where the market dropped between 0 and 5%
It
on the
was
negative side.
2015, and I nailed that in the prediction because I said it was going to go down 1%.
And it just doesn't happen that often.
Was
So
that
a
right?
slight fade.
2015 was the only year?
Yep.
2015 was down one. Actually, Slick Charts has it up one in 2015.
It was like 25.
28,
Yeah.
2018 was down 4%.
Yeah.
So, say la vie.
Midterm election 2018.
There you go. You're looking for, I like it. We got two
Gonna
numbers
get
in the
more
books.
expansion on the trade board like we got in 2018.
Yeah, midterm
68.
election years actually tend to
I
not do
I
as
did
well
think
as
it was
others.
harder to project the S&P this year than last year.
Yeah, oh, absolutely,
Yeah.
100%.
I
You
thought it
know,
was easy to predict the S&P up last year.
last year you and I came within nanoseconds of nailing
Mhm.
it, and not. And once again, it's not that it felt very straightforward last year. It feels like
Well,
there's
the
more
AI trade
variables this
was a
year.
catalyst, and nobody was questioning it. And Mark's right, there are valuation concerns. There's fundamental concerns on certain areas of the AI trade, and right now the QE trade is outproducing the AI trade.
Mhm. I just have to point out to Mark, in 2014, the market made 14%, 2010, 15%, 26, 16%.
I feel good at
So
13.
yeah, I mean,
Yeah.
midterm election years are not always down years. They just happen to have been the last three of them. So there's not, I don't know. There's a lot going on here. This is great conversation. I love it. 6,800 and 7,800. We're locking them in. Next question we're going to go with here is going to be sector wise. We've already kind of started to hint at what you guys think is good and bad, going to be good and bad based on your analysis just a minute ago. But now you got to pick one. Matt, we're going to snake style
Yeah.
this the whole way through. What is one sector that you think is going to be the top sector and why?
If you're going to be projecting 13% up, you're going to pick something on the aggressive side, and it's going to be communications or technology. But I still believe in the AI trade. I still believe in the technology space, and I do believe in the AI expansion from an infrastructure perspective, notwithstanding a very choppy fourth quarter this year. And it absolutely was an extremely choppy fourth quarter this year. But I still believe in the AI trade, and I still believe that we're still in the expansion side of it. So I'm going to go technology. I think technology is going to be, at the end of the day, the best producing sector this coming year. And it wasn't this year. Like basic materials had a better year than technology this year. Communication had a better year. Finance had a better year. Tech was just kind of one of the pack, up 18% this year. I think it leads next year. So I'm gonna say tech kind of rebounds into their leadership position. I said this I think 5 years ago. If you pick tech 80% of the time, if you pick tech 100% of the time, you're going to be proven right about 75% of the time. It wasn't last year. Last year was the middle of the pack. I think they reassert their willpower this year. I'm going to go tech.
Okay, I like it. Fits the narrative,
Although
fits the theme.
secondary ones would be healthcare. Healthcare. I I think healthcare has a decent year next year.
Decent. I like all of that. Mark, what about you? Which
Yeah,
sector?
healthcare. Like if I'm going to predict 2% down, that's not going to happen with 250 dojis in a row,
No,
right?
no.
Like it's not going to be like, okay, let's just doji 250 times, right? That's
Mhm.
not the path. And I don't have like last year, I felt like I had a really good path. I felt like last year you were going to have volatility at the start of the year, and
Mhm.
then you were
Hmm.
going to rally. In fact, I called that out in the podcast. I don't have a really good feel for the path. I do feel like if things get really rocky, they're probably happening in February and in September, two traditional months in which markets get, a little bit, choppy, rocky in those situations. But I'm going to go with healthcare because if you're going to have some volatility during the course of the year, defensive sectors are probably going to have a bid. Also, how do you not love the general price action of healthcare coming in? If you have 2% down, you also don't have a raging bear market, right? That means you're going to have sector outperformance. You're going to have sectors be healthy. And I love the cyclical aspects of this defensive sector. Love the price action, love the technicals heading into the year. I
Mhm.
think, it sat out most of the year, and I think positioning is strong. I think it's going to have a really, really solid year. I don't think you're going to have policy get in the way like you did at times this year. And so I think healthcare, a combination of general market environments, a combination of technicals heading into the year, and just a little bit of a feel on that. So healthcare is going to be my pick.
How would a shakeup of RFK impact the sector, do you
It'd
think?
be
Or would it have,
positive,
okay, because that's part of
and
my, I
that's
think
part
healthcare
of
is
what
gonna,
I think is
yeah.
going to. Yeah, that was
I don't
my.
know if we're predicting it, but if I had to
I,
predict
I
it,
I
I
would
would
be shocked if
say,
RFK is there
oh,
throughout.
I think the Trump admin is not going to go into the midterms fighting with the same deck they fought with in 25. I think there's going to be some turnover in the secretaries, and I think he's going to can
Yeah, and that was
reset
my
pace.
comment on you're not going to have the administrative headwind.
Hmm.
That was
Hmm.
my way of saying RFK is not going to be around, right? And I think,
Yeah, and I think a lot of it has to do with where the polling is right now going into an important midterm election,
yeah,
and you don't want to carry baggage in a
you
midterm.
do not carry baggage. He's dead man walking. He
Yeah.
just is. And so,
That was part of my. I think healthcare is going to have a decent year too,
and
but it
that's,
wasn't all. It was just a slight part of it, but
yeah. No,
but
I think there's multiple components, and I think it
yeah.
fits well with my general market prediction. And one of the things I like about it is I think even if I'm wrong, let's say the market's up 6%, 7%, healthcare could still lead in that environment,
I
right?
mean,
So
it's the most cyclical of the defensives.
And so if the market's up 14, 15%, or Matt's range, healthcare is not going to be the lead sector. It's going to be tech or comms,
But it
right?
could be up 12% in that
But it could
environment.
have a healthy year. And so I
Yeah.
think we all like healthcare heading into the next year. I think there's multiple reasons to. I think it's a sector you want to gravitate towards in looking for trades, looking for investments, looking for positions. I
Yeah.
think it's going to produce a lot of winners for you in the next 12 months.
All
I
right.
think it's a good long-term play no matter what. I'll never forget the statistic I learned in graduate school about when I was born in 1979, healthcare represented about like 9 to 12% of the economy,
Say
depending on the exact.
23. Like,
And now it's like 20 plus,
yeah, it's
Yeah,
intense.
the amount of
It
space it
dominates our
takes up
life,
of the
G.
pie is
Yeah.
it's crazy. And it's only
It's
going to get
sad
better.
that it's that important, by the way.
Yeah.
It's like, but here we are.
Big business.
All
All
right,
right,
next.
next one, worst sector. We went with the best. Now let's go with the worst performing sector. Mark, you're going to be back up.
Tech will be the worst performing sector. There's no way I can be consistent with my predictions and not have that as the outcome.
I'll tell you right now, me and Mark shared a lot of Volkers last year. We ain't sharing
We
any
share,
next year.
you know,
No,
so
No.
like, yeah, no, if you have my general market outlook of economy fine, margins expanding, earnings fine, it probably means your average stock is doing all right in that
Mhm.
environment. It's
Also
hard to,
probably means you're getting some Bernanke's next year.
yeah, I don't know about that. Well, I'd be careful about talking. Listen, we're
You
just,
can't
we
you
do.
can't continue say that the economy is going to expand,
Yes, I
profit
can.
margins are
My
going to
argument is
expand,
logically
and yet the
consistent.
market's going down.
No, the market is going to take the year off. 2% isn't much of a down, right? It's going to take the year off. And I do think it is going to, because of the CapEx narrative shift that we're going from to, if you spend CapEx, it's a win. If you make a deal with OpenAI, it's a win. If you fart into the wind, it's a win, to, oh no, we're going to have us show, you got to show me the winners. And I think that is where we're at. And I think tech takes the year off, and I think there's more casualties in the space. I think there's more oracles in the
So in
space.
general, would you suggest that, the first 3 years of the AI trade, AI dominated because of CapEx, but now we're at the part of the cycle where it's not just about CapEx, it's about the next evolution of the AI
Yes.
trade. And in doing so, where the money flows is from figuring out what the AI trade is going to do. It's going to flow into the QE trade, not just because we got fiscal,
Yeah, not just
accommodation
because of
and
that, because I
monetary
think there's this
accommodation, but
realization.
because the AI trade has evolved so much that it's going to allow these cyclical companies to have higher profit margins
Yes.
because of efficiencies.
Yeah, I think the market's realizing your average stock's a winner, right? AI is a net win for your average stock. And I think in the winner losers, there's going to be more losers than winners in the AI from the tech side of it. I think there's going to be more oracles than there are the winners. Now, I think the winners are going to be insanely
I
rewarded.
also think that's a positive thing in building out the AI trade is kicking out the bad faith actors.
But I
So,
think
yeah,
this is just one of those transition years
yeah.
where, like, oh,
It makes
who,
sense. Like
who are we? Who are the winners? Right? I mean, we've seen how fast Oracle got punished when
that's
there was
kind
any
of the
question.
theme right now in the
You know,
market is money flowing from the AI trade into the QE trade for a variety of different
and
reasons.
so I think there's going to be a few like insane winners, right? But I think the losers are going to dwarf that, and the net result will be tech being down 5, 6, 7% as a whole. Right. That's not
Mhm.
that big a deal, but it down 5, 6, 7%, your average stock up 10%. That brings markets down a couple percent because of the market weighted. It's kind of how I came to my general conclusion. So I have tech as the worst sector this
So
year.
you would blindly buy RSP over the SPY
Yeah,
if you were hopefully.
I am in the RSP over SPY camp this year.
Gotcha.
Yes.
My worst producing sector is I'm going to go with REITs. I think REITs are.
It's not a real sector.
It is a real sector, and
It-
I am going to pick it as the worst producing
I'm going to
sector.
pick Dave Hubaba.
It's got a lot of interest rate sensitive areas of the market. It's got a lot of commercial real estate in there, which I don't see as a hot button topic going into next year. And it basically did nothing all year long.
Mhm.
And so I'd go REITs one, but then I'd say energy. Like the president, if there's one thing President Trump wants, he wants cheap oil, and he gets his cheap oil. And so whether oil's at 55 or 65, I don't see energy getting like a massive bid next year. And so with the market, my projection of the market up 12, 13% next year, I could see energy being up 1 to 2% next year, down 1 to 2% next year. So I do see a couple of sectors flatlining next year, and I think energy is one of them.
And real estate is your
Real estate's my
specific answer.
official pick,
Okay,
yes.
gotcha.
Because as of right this very second, it is still an official sector according to the
It's
S&P
not a real
500.
sector.
It's a real
And
sector,
in,
right?
in in your heart, I agree with you, Chucky. It's not a real sector. Um,
XLRE. Anyway,
but until they kill
so
it, I can pick it.
so there's your pick. All right,
Yep.
next one we're going to move into the commodity space. We're going to go gold. Obviously, just quite a year for gold in 2025. What is on your, mind for 2026 with gold? Matt, you're up first on this
Oh,
one.
what's on my mind is this snapback volatility pullback on with the breakout last week, slight extension coming back down this week. That's what's really on my head. There's not a chance in the world I'm going to pick anything besides up here. And I don't care that gold had one of its best
In fact,
years
I am
in
glad we
recent
had a
times.
red candle doing the podcast
I
because
am too. It allows me to have more confidence going
you
up.
and I are both going to pick up, and
We both are,
I'm going to pick $1 above you.
You'll wait till you hear what dollar I say.
That
Uh,
may not win you a Volcker, by the way.
Now,
So, you
Especially the
know,
context of what he just said, Matt.
yes, I
It
agree.
does. It does.
You're gonna have to see boldness.
Um,
Volcker would not just pick $1 above the opponent. So I don't know. Here
no,
we go, Matt.
no, Volcker would try to bullseye. Um,
Hmm.
I certainly believe up, and the reason is really kind of twofold. One, over the last 15 years, I've talked a lot in this podcast, outside this podcast, about the macro currency situation. I did a podcast a little over a year ago where I laid out the historical evolution of currency, and I talked about how we are in the last stages of the third phase of the currency cycle from a macro perspective. We're watching the dollar lose reserve status. We are in, we're not talking about a hypothetical scenario that could happen 5, 10, 15, 20 years from now. We are watching trade agreements getting signed to move away from the dollar at a level that is unprecedented. Even after the subprime meltdown in China basically said, we're going to kill the dollar and we're going to basically do everything we can to surpass the dollar. I'm seeing even more risk at this point. I've long held the belief that we're going to lose reserve status, but we're going to maintain being the number one currency. I still maintain that here today, but I think we're going to continue to see the loss of reserve. There was a reason the dollar had one of the worst years it's ever had last year. It started at
Hmm.
110, it was down 12%. And you might say,
that's a
down
huge move.
12% is nothing on a currency called the number one currency in the history of mankind. That's a massive, massive deal. And yeah, it hasn't done much in the last, say, 6 months, but that was a big time situation. And I think unless the president comes off those tariff plans aggressively next year, which we'll have to wait and see on the Supreme Court side of that, I think you're going to see the quickening of the end of the reserve. Now, what does that mean for gold prices next year? Well, that's number one.
Hmm.
Number two, and I think it's even simpler to say this, every fiscal government around the world has lost their collective minds and they're all committed themselves because they've talked themselves into this that they're going to grow out of their debt. The AI trade can grow out of debt. It can. It can't do it next year. And so I think that's more of a 10 to 20 year time frame. Next year, I think we still see the continuation of gold. I'm going to pick 5,300.
5,300. Love the analysis. Thank you very much, sir. Mark.
What is that percentage
20%.
wise? 20%. That's a good number. See, that's the exact number I had at
+1.
5300. Well, no, I'm not going to do that. Listen, I'm going to talk about gold and then I'll come up with a number. I'm going to give Matt, because Matt's analysis is so good on this subject, that I'm going to officially guess 5250 to give him top shelf on this. But for years on this podcast, for basically 10 years of my own personal beliefs, what's happening right now is exactly what we thought would happen,
Mm-hmm.
right? And so it is happening. Gold is pricing this in, because somebody asked us the other day in the
Isolated pockets with dominant currencies within those pockets on the geopolitical side. Yeah, that's
yeah,
that's
Mhm.
absolutely happening right now.
and somebody asked us the other day, is like, well, this is, when traders get done with this move, I'm like, this, both Matt and I both sat back and we are like, this is
Say
not
traders.
traders. It's not been traders that have been said. Traders send up meme stock. This is central banks. This
Mm-hmm.
is institutional powers. This is a recognition of the fragility of the current system and wanting to shore up, as Matt likes to say, the asset that's worked well for thousands and thousands of years and is probably going to work well the next year as well, right? You use some version of that saying all the time. And so it's happening before our eyes. It's happening right now. It's a real structural move. It is not a trading move. It is not a momentum move. Those things help because algos get involved, right? And that's why algos can send up a silver 10% in a day because things are so juiced up, but it doesn't change the structural move, right? That kind of nonsense will happen on a day here and there. You'll have a big red candle because things got too disjointed on the upside. The forces pushing these prices up are real, and they
Well, and
really,
momentum's not slowing down. Look at the
you know,
monthly chart. The momentum's expanding from the 90 EMA on the monthly chart. We're not slowing
Mhm.
down here. Like, and I do expect a slowdown from this year. Like, I don't think you can expect 100% return on
no, that's
like that's outlandish. And the powers that be will increase margin requirements dramatically if that starts happening. So I think 53, 52, 50. I think those are good
I
numbers.
think those are good numbers, and don't question the structural forces behind this one. They're not traders; they're real, and
Traders don't have the money to drive gold from 2K to 4,500.
nope,
No, no,
No.
no. Fascinating. And we're
Yeah.
going to stay right with metals right here. We're going to go from gold to silver. Mark, you're back up on this one. Obviously, slightly different analysis, but very similar charts. And silver had a gangbuster year. What's your read on silver and what's your number?
yeah, I think the move structure. I think a lot of the move has happened, and silver. And you're going to hear Matt and I both use the $100 figure. It feels like silver wants 100 badly.
He wants to
Uh,
touch it.
it wants to touch it, right? My final number is going to be $82 because I do believe that the move is real. The move is real, right? But I think you're going to have to digest silver a lot of this price movement because you have went from 40 to 80 in essentially overnight, right? And I think that is going to take a period of digesting. Now you might go to 100
Well,
before
it
that,
has a fundamental impact on cost inputs across the world too. Like,
and so I,
Mhm.
I I do think that there is more than just the anti-fiat, anti-government, all of that going. I think there are genuine forces at play. You don't just mine silver. That's one thing you have to understand. Most of the silver that is mined is a byproduct of copper mining, of zinc mining, and so forth. You just can't go open a silver mine, right?
mm-mm.
And the
Mhm.
AI trade is needs silver. Silver is a key component. Elon Musk whining on Twitter the other day about, oh, silver is used in a lot of industrial applications. It's because it's used in a lot of industrial applications. That's why I was complaining about. I was complaining about because I didn't want to pay as much for it. But it's not like if you combine that with some of the central bank aspects of it, with the AI trade, with a genuine repricing, and you throw into boot, China's recognizing this and saying, no, in order to export silver, you're going to need a license from the government to do so. Silver's entered the big boy table, and it's not leaving the big boy table. And so I think the forces are structural once again. I think they are multifaceted on silver. I do think you need to digest some price. So I think you end the year higher, but modestly higher, $82. But it is not going to stop. But if you don't touch 100 this year, I'd be really, really, really surprised.
Yeah, I was talking to the Traders Lounge the other day, and I said very similar to what Mark just said. I'd be a little surprised if we don't ding 100 on this run that we're having in silver. It's a historic run. Um, as silver goes up and up and up, there's two forces that are going to compete against it. Number one is it becomes too expensive to buy and start really kind of building out the infrastructure. And so you could have some demand equations that kind of contract a little bit. Number two, silver, when you started the year, the ratio of gold to silver was supported gold ownership more than silver ownership. Excuse me, it supported more silver ownership than gold ownership. And that's why I projected last year that silver was going to have a better year than gold. And even though gold had a historical year, the GS ratio, I mean, silver is just quite frankly lapped, even gold, silver lapped this year. And so
Mhm.
right now, though, you're dealing with a situation where the GS ratio hasn't been this low since, I don't know, 2010, 2011, after the last major silver run. And you start getting into some levels that we haven't seen in 40 years, quite frankly. on the GS ratio, getting into like 50 to 45 on the ratio. I mean, there was 150 years ago, we would have like a 25 to 1. But like there's just like silver's had such a run, and I certainly see it continuing in the short term. But I'm not sure it continues to outperform, gold as that GS ratio gets down to the low ends. Because at some point, once that GS ratio gets to say 50, gold and silver traders will lock profit in on silver and park it in gold. Like that's what they will start doing. And so I actually believe that gold will outperform silver this year. Um, Not at first, but I do think at the end of the day, gold does outperform silver slightly, slightly. And so I'll say, mark 82. I'm going to say, yeah, we ding 100, but I also think we're going to deal with some violent pullbacks next year. Like I think we're going to deal with some pullbacks that we just didn't deal with this year. And so I'm going to say 88. Michael Irvin's number is my final number, but very similar overall performance to gold in terms of price structure.
Michael Irvin, great number. All right, okay, very good. 82, 88, you're bullish on both of those. We're going to move into probably the biggest commodity in the world, which is going to be oil. Oil has had a lot of downward pressure the last 6 months or so. Matt, we're going to stay with you as we're doing snake style here today. What is your prediction for oil in 2026?
I mean, the number one thing that you have cooking for oil is the GDP expansion, and that certainly supports higher growth on oil. Um, but you are starting at oil on the low price this year, which will certainly make me want to think on the little bit more on the top side. There's just one thing that I cannot overcome with oil because if it was anybody else, I would say up here, like anybody else. But the president sees his entire economic agenda through the lens of cheap oil, through the
Mhm.
lens of cheap gas. And he has that belief, and he's not wrong, but it's a very dominant belief that if oil's down and gasoline is down, everything else will be good. Like that's kind of the epicenter of his belief system economically. He talks about it all the time. And we all know he does things on the side of the analysis that's maybe calls up Saudi Arabia and is like, you gotta, you can't, if you want that AI trade, if you want that AI infrastructure, you want those NVIDIA semiconductor chips, you need to pump 1 million barrels of oil out there. And so that's in the back of my head. I also wonder what conflict, because we talked about this a little bit, and I think this deserves a podcast in its own right. But guys, there's a reason America is now focusing on the Western Hemisphere. And that
Mhm.
reason isn't just because Venezuela is the number one drug dealer in the history of mankind. There's deals, in my opinion, that are happening here on the macro side, specifically between the US and China, where the US basically says, you don't mess in our backyard, ever, ever. And China says, well, you don't mess in our backyard. And that's where the pockets come in. And the Chinese yuan becomes the dominant currency from a reserve perspective in the Asian pocket. And the euro becomes the dominant currency in the European and the African pocket. And you don't mess with America in the Western Hemisphere type scenario. And so I wonder how Venezuela conflict, which is obviously the biggest oil reserves in the world right now, how that impacts oil, because I do believe that will continue. And so there's some open questions here, but at the end of the day, the number one thing that dominates my thought process here is President Trump wants lower oil, and President Trump's most likely going to get lower oil. I'm going to say final answer 62.
62 bucks. All right, Marky.
Yeah, no, I'm not going to duplicate a lot what Matt said, which I agree with. I'm just going to throw in, we are starting the year with a supply glut, right?
Mhm.
OPEC is not, is doing exactly what Trump wants.
You're gonna put so much supply until people can't
We're
take it.
doing it with a supply glut.
Mhm.
The fact is, the AI trade needs as every ounce of energy you could. can get from all quarters. I think that is going to help, along with the fact that governments are being very accommodative, and so I think there are things that keep oil stabilized. I have 65 is my final number. It's hard to see oil doing much better than that, though, right? Like, you would have to see a series of events, because plain and simple fact is, as long as until Trump is on the way out, right, becomes lame duck status, Saudi Arabia is going to do his bidding. They've been pretty telegraphed about that. And as long as they're doing his bidding, right, that means there's going to be a
Might as
cap
well
on
have a
oil.
big old flashing neon signs that says "Open for Business." Says
Yeah,
Saudi
so they're going to do his bidding. That's going to put a cap, but the natural macro forces are going to work its way out.
By the way, I think like we could hit 50 before we hit my 62 target.
Yeah, it wouldn't surprise me at all. Wouldn't surprise me at all. So 65, I do think you stabilize just because of general fiscal reasons. And fact is, you need every bit of energy this globe can get for the AI trade. I mean,
Squeeze it all.
you need to squeeze every bit.
Consumers aren't going to be happy about those increasing cost on energy next year.
No, and that's going to be a political issue. It's going to be a political issue.
It will.
Big differences in equities, but not. You guys are pretty close on commodities so far.
We're not going to be close on Bitcoin.
Let's see if we can step in the danger zone like Kenny Loggins here. Let's go to Bitcoin
150.
next.
I started bidding at 150.
All right, Mark, you're up first.
150.
So, you can start wherever you want.
I'm sorry. Listen, I love Bitcoin's my favorite long-term asset for many of the reasons I love gold. I believe Bitcoin is the next generation's gold. I believe it has institutional adoption. I believe all of the things I've believed at every point for the last few years. I believe those forces are still at work. 150, final answer, Bitcoin. Let's double this next year.
Well, doubling it would be much more than 150.
Well, fair. Yeah.
I'll tell you, you might as well say double and get it into the 180 level, because the simple reality is if you get above 127, you're going to 150.
I think if you get above 90, you're going to 150.
I don't believe that. I think there are institutional well sellers at 120. Like I saw it a couple times this year when we started dancing those all-time numbers. Wells dumped. Like wells.
Factual statement. He's telling the truth.
Wells dumped. And they dumped multiple times at that. And so I really like Bitcoin starting at the low position on the chart coming into the year. Like don't get me wrong, I love silver and gold, but after two massive years, you could see a lot of scenarios on both asset classes next year. And it's because they had historical years last year. Nobody's going to argue that Bitcoin had a historical year last year. Basically, it was down 20%, and it hasn't been a fun tradable asset. In my opinion, it hasn't been a fun tradable asset all year long. Outside of one pump that we had earlier this year where we caught a lot of that on Bitcoin or on Ethereum. I liked Ethereum a little bit more, Mark liked Bitcoin, but it wasn't a fun tradable asset last year. Although I do like the reversal, I don't think it's going to be a fun tradable asset next year either. Where's everybody's arguing about Bitcoin being digital gold these days? They're all gone. So you're going to need to see.
I just argued that.
Yeah.
We're not all dead yet.
You're all dead.
Python style.
You're all dead.
Not dead yet.
The digital gold argument has been dead. It's dead. It's dead.
I don't believe that.
It's dead.
I do
if
not
it was
believe
digital
that.
gold, it wouldn't be down this year when gold had the best year in the history of mankind.
No, listen. This been said. No, listen.
Why can't you just argue the anti-fiat side of the equation? Like, just make that argument.
Would you be happy if we called it baby gold?
No, I wouldn't, because it's not accurate. It's not gold. It's not the inflationary protection mechanism that gold is. It doesn't have the historical edge that gold does. It's not gold. I've said it for 10 years. And you know what? It doesn't need to be gold to be great on its own right.
Call it neon gold then.
I just think it's really lazy analysis by Bitcoin sellers, personally.
Have you been to a Bitcoin message board?
My goodness.
It's not exactly
I meant the Wells convincing everybody else that it's digital gold. There's other arguments you can make on it. My point is this: it's not digital gold. It's not getting inflationary bids. It doesn't get safety bids. It doesn't get defensive bids. It doesn't get every bid that you get on a gold pricing event. And so I just have a hard time accepting that argument, honestly. Um, I will say I think I'm in the minority in the world. I think the world sees Bitcoin as digital gold. I just personally don't. I'll have to say I don't see it above 120 because if we do get above 125, for example, I think 150, 160, 170, 180. If you can get past that massive, massive supply zone, I don't think we get it. I think we end somewhere around 105. I think we stay inside range that we dealt with this year. Doesn't mean there's not going to be great tradable opportunities, cash flow opportunities. I just don't see a historical doubling of the money this year. And
So
also, I think we're getting more stable on Bitcoin analysis than we have in recent history. I think it's not as new and shiny as it once was. And so it's becoming a little bit more stable. I mean, Bitcoin was down 20%. We didn't see radical changes. We didn't see a 70% up, 70% down. So I think it's getting a little bit more stable there as well. So I'll say officially up, but inside range, honestly, anywhere between 100 and 120 would be fine.
sure. Okay. So give me a final number though, just for
Let's go 105.
105. Okay. All right, very good. We're gonna move past, actual numbers here for a minute. We're gonna talk about the Fed, which is gonna drive a lot of this and impact so many of these different predictions. Who is gonna be our next Fed chair? Let's just start right there, Matt. Who you got?
One of the Kevins. That's my answer.
Okay. Pick one.
No, it's a coin flip. Like
Just two
Trump's.
Kevins,
Hey,
two sets.
are you kidding me? Trump's just going to coin flip that day. Like one of the Kevins.
See, and I'm going to pick one of not of the Kevins because I think Trump.
That's the pick. It's either the Kevins or it's not the Kevins.
And I should get odds on this, but I'm going to go one of the not Kevins because I think Trump doesn't have a clue of who he wants to really do it, or it would have already been
He'll
announced.
probably listen to the last person he talks
He'll
to.
probably listen to the last person he talks to and then make the announcement the next day. And since there are 8 billion other people on the planet, I'll take one of those instead of one of the
So one of-
Kevins that get.
That's like
So
kind of
we're
like
going-
taking the field versus Tiger Woods when he was back in 2000.
We brought this up on the podcast a couple weeks ago. I still think it is an excellent. You would already be up on that bet marginally had you taken that not bet against the Kevins because all of a sudden Waller.
Well, the odds were ridiculous. Back
They were
then.
ridiculous.
Like, they were mispriced. If there's a guy that's outside of the Kevins, it's Waller, in my opinion. Governor Waller.
It's
And
probably
you're taking the
I personally would
Kevins.
rather have Governor
it's
Waller.
Dave
over Kevins.
Hudabaugh. Somebody's going to say, "Hey, Trump, I like Dave Hudabaugh." And Trump would be like, "Okay, he's going to cut rates? Yeah, he loves cutting rates." That guy will be your next, or that gal will be your next Fed chair.
All right.
Technically, he is not one of the Kevins, so he's in your analysis there, Mark. So that does count. How many rate cuts are we going to have next year, Mark? You're
Or
back up.
Whoever
Mark is
it
pricing
is,
one.
the market is pricing one. I'm sure Matt has 3 or 4 himself. I'm going to go 4 because Bostic retires the next Fed chair. Trump's going to recade this, and it doesn't matter the consequence. They're going to cut. It wouldn't matter the consequence. So I'm going to say 4 cuts.
It depends on how big those cuts are, because if it's I'll say 3. I think they cut 3 out of the 8 meetings.
Okay, that'll still be quite a few cuts. All right.
We're both
so Mark
far
has
more
4.
aggressive than the market is. The market's anticipating 1 cut.
That's dumb. That's just wrong.
It's just wrong.
But all in all, let's recap here. Matt, you got 7,800 on the S&P. Tech, you got REITs as the best performing sector. Worst sector, REITs. Gold 5,300, silver $88, oil $62, Bitcoin 105K, one of the Kevins, and 3 rate cuts. Lock them in. Mark 6,800 on the S&P. Healthcare is the best. Tech is the worst. 52.50 on gold, $82 on silver, $65 on oil, 150K on Bitcoin, one of the not Kevins, and 4 rate cuts. So we are not going to have chalk next year. We're going to have some differences of opinion when we have those Volkers and Bernankes by the end of the year. Any final thoughts before we move into our bonus segments?
No, all of Mark's projections make sense. All mine makes sense. It's just a matter, do we get the expansion on tech or not?
And it's the
That is one of
process, dude. I cannot underestimate, when you are doing your own trading and your own macro, the process is such a worthwhile process, right? Because, I guarantee this is some version of what Matt and I do every week, right?
Just a
Yeah,
more
Every week,
macro.
just more macro.
By the
I
way,
love it. Thank you.
on January 2nd, I won't care 1 second about these predictions.
No, and you could change your mind at any time. It's a wonderful world we live in, right? Yeah, yeah. But we're locking it in for
I
now.
mean, don't
This
get
is
me wrong. I
the
take it
moment we're in.
serious. I take
Yeah,
it serious. I don't like I go through the process, but team tackle navigates technically.
yeah, yeah.
Yeah.
I'm with you. All right. Last couple of questions I've got for you guys, just some fun ones,
Yeah.
politics and one sports one for you. Obviously, politics are always on our minds. We talk about them quite a bit. We're going to start talking 2028 here, Matt, for before you know it. And next year, you're starting to see candidates going to be committing to that. Who do you have as the front runner for each party in 2028?
Well, unlike decades of the past, you kind of know where those front runners are right now, and you kind of know where it's going to go. I got 28 being a JD Vance versus a Gavin Newsom ticket. That's what I think, and I think those are going to be the front runners at the end of this year. I think they're going to be the front runners going into 28. I think they're going to be the front runners going into each convention. I think both of them will have competitive primaries. I do,
Hmm.
especially on the Democrat side. Man, you're going to have 10 to 15 people run on the Democrat side. Anywhere from the very conservative Andy Bouchard to the ultra liberal AOCs. Like you're going to have 10 to 15 people run on the Democrat side. And I think you could see 5 to 8 running like serious candidates on the Republican side. But at the end of this year, I think the momentum right now is Gavin Newsom on the Dem side. And Turning Point USA just basically nominated
Yeah, they basically
JD
say JD Vance
Vance
here. Yeah.
and even Marco Rubio, who was the competition for the Trump MAGA vote with JD. Rubio came out and said he's already supporting JD. So I think it's JD Vance and Gavin Newsom. It's their ticket to lose right now.
Okay, Mark,
Yeah, I mean, it's hard to
same
go against it.
question.
If you follow politics, it's hard to go against that analysis, right? I mean, I do think that AOC will make a surprising stint in some of those early primaries, and that's going to be a major wild card. She's a true believer, got the Bernie Sanders type of endorsement. She is, whether you like her or not, uh, appeals to a certain demographic, and you got to respect that. And the
Mhm.
fact that primaries tend to, well, you go to the edges in the primary and then to the center supposedly, during the general election. She's going to have a lot of support. She's going to have a lot of support. If this election were tomorrow, she would do surprisingly well. Now, I think Gavin Newsom's too well polished to give up the lead he has, and I think he's your next Democrat
He currently
nominee.
has the podcast bros calling him a Chad.
He's just too well polished. Like he he was made for this
He
moment.
looks the part.
He does,
We can
and
debate the politics behind it, but
and at the end of the
I'm not sure
day,
America's that intelligent to
while
do
there
that.
are, so yeah,
Did I,
oh, no,
was that a final thought?
that
I
was a
heard there.
I gave it a thumbs up. I said to the Chad. I apologize.
Oh, you're good.
No, all right, you're good. Well, but those are front runners. Actually, what I'm more interested in is probably who you guys see have as a surprise candidate, which is going to be the follow-up question here. Mark, you mentioned AOC. Is that your surprise candidate that you think could
Yeah,
actually
it's
come out
hard to
and win?
see one on the Republican side, and maybe Matt has some insight on this one. I don't.
Let's
It
stay
is
on the Dems. Let's stay on the Dem side first.
like it feels like there is going to be a progressive champion, right? I have that as AOC, the progressive champion, the true believer, that is going to have,
Is that a surprising pick though at this stage? I mean,
I don't.
she's filling arenas. She's the fifth listed on the ticket right now. Like,
I
you
think
know what I mean?
definition wise, it's not a surprise candidate. I mean, probably for a lot of people who don't follow
Because
politics, for sure.
because she legitimately, if she could legitimately could be the next vice president of the United States. Like, she
Hmm.
could be Gavin Newsom's VP pick. Um, she's definitely in the running, and there's only about three other candidates that are bigger than AOC right now.
Uh,
Don't get me wrong, it's a surprise pick because like it's AOC, but anybody that follows retail
well, the
politics,
surprise candidate would
it's
be
not
Barack
surprised.
Obama when Trump gets the Supreme Court to rule that he can run for a third term, and Barack says, "Well, fine then, let's do this. 3 on 3, let's do it."
That's not happening. So Mark says AOC. Mark, you said there's going to be a progressive candidate, and I certainly agree with AOC being the progressive candidate. She's getting the Bernie bro, you know, support already. Ro Khanna. Don't sleep on Ro Khanna. Congressman out of California. He represents the Silicon Valley. The Epstein situation has brought Ro Khanna a tremendous amount of credibility in on both the left and the right. Him and Thomas Massey has kind of led that charge, and it's kind of given him a national profile of which that he has never had. He's also as liberal as AOC, but in my opinion, he's much more well spoken. In my opinion, so I'm not saying he's going to get the progressive vote over AOC. I'm just saying he
Hmm.
would be a dark horse candidate in my opinion.
Is
Um,
there a chance that? I mean, an honest question:
like
have we?
the vast majority of people do not know who Ro Khanna
Well,
is.
nobody knew who Barack Obama
Yeah.
was this stage either, and that's the thing. Are we capable of having an Obama emerge like that, or is it too fast these days and too established too
No,
far
like
in advance?
it's too advanced. We're too far in front now. Yes. I mean, the Obama didn't come out of nowhere in '08. He gave that '06 speech. He gave the '04 speech at the convention. And
Hmm.
so, yeah, like I think the candidates on the Dem side are known.
Yeah.
I don't think because I could list 10 Dem candidates that have a national profile that I don't think you're going to overcome. Um, on the Republican side, I do think the list is narrower. I think you got a big candidate list on the Dem side. On the Republican side, I'll go my dark candidate. Mark said he didn't have one. Um, Marjorie Taylor Greene.
Ooh,
I know it's crazy and shocking for people to hear that name, but unless you're inundated with the political speech and you're inundated with what's happening out there, Marjorie Taylor Greene, there's two basic versions in the MAGA world right now. You have
Hmm.
MAGA, which is the big tent MAGA party, Trump's the head of it. But you have this wing in MAGA that is called the America First Party. And the America First Party has kind of broken from MAGA right now. That's the civil war that's happening in MAGA right now is the America First wing disagreeing with the MAGA wing on things like foreign policy, for example. America First is truly America First, America only type thing. Marjorie Taylor Greene is kind of the unofficial, like one of the leaders of that America First movement. And so with her and Trump obviously having a split recently, you could see a scenario where some dissatisfied Trump voters from 24 end up gravitating to the America First movement for things like the America First movement is not happy with the rate of immigration right now.
Hmm.
They're not happy with foreign wars. They're not happy with what's going on in the Middle East. They're not happy with what still ongoing wars in Ukraine. They're not happy with the things that are happening in the Caribbean right now. They're truly an American First Party, and so Major Marjorie Taylor Greene may seem like a laughable when you think about this from a national political perspective. might seem like a laughable name when you're talking about dark horses, but you see a little bit of a trend moving there. And if we're talking about true dark horses that are not on the radar, like AOC's on the radar, she's either the fourth or the fifth leading candidate right now. Even Angie Burchard, who, a conservative Democrat candidate from the governor of Kentucky, sixth, seventh on the list right now. On the Republican side, I'll even throw another guy in there. You guys ready? Because I think
Yeah.
I think there's going to be big time fights historical for the future of the Republican Party. Mitt Romney.
I actually thought, I don't think it's crazy
You're
because
going to have a traditional Reagan, Lincoln,
I would, yeah.
neocon conservative, and Mitt Romney's the guy.
I find it interesting on the Democrat side and the Marjorie Taylor Greene.
Dark horses, but those are both dark
Yeah,
horses.
both individuals you brought up have Epstein credibility, right? Like as far as and so I think that is an issue that is not going to go away.
I would personally vote for Thomas Massey.
Yes,
I'm a Massey guy.
I don't think Massey has any interest in it.
No, Massey doesn't care.
I don't think he has any interest in it. But fascinating. I love politics so much.
I could talk about this one until the cows come home because there's some truly historical, fascinating things happening within the backdrop of both the Democrat and the Republican Party right now. Because historically, these two parties are not well liked in America right now. Democrats have an 18% approval rating right now in Congress. Republicans dwarf them at 26% approval rating right now in Congress. So not exactly well liked out there is Congress. So you are seeing some battles for the future of these two parties right now. I find it fascinating, quite frankly.
I love it. I love the analysis. And Mitt Romney, you grabbed my attention with that name. I mean, I think that I could see that, for sure. I mean, it makes a lot of sense.
Anybody better to, and again, I'm just saying representing of a certain wing of a party, right?
Yeah.
Name me a better name that would represent the traditional Reagan, Lincoln, neocon side of the party than Mitt Romney right now.
Yeah. It's a great question. I don't see one.
Jeb Bush just raised his beard.
Jeb Bush tried to raise his hand until he got slapped down. He was like, nope.
Hey, nope. I'm a Bush. I was told I would have a turn.
He's
never overcome that
night slap from Donald Trump in the 2016 debates.
Never gonna happen. Low energy Jeb.
He was so bad.
It's never gonna come back from that.
You saw Jeb one time on the debate stage. Trump started laughing at him, and he
Court
shrinked about
just
7
saying that
inches.
a president can run 3 terms. That way, George W. can come back, and Obama.
George W.
And Trump,
has no interest,
and we just throw them all in the ring. Get Clint. Bill Clinton's still alive too. We'll get Clinton.
Although
in there too.
I would really, really enjoy signing up for that drama between Obama and Trump in the battle of the third terms. Here's one hoping that we actually care about the Constitution of the United States.
Well,
sure. Yeah.
We'll just throwing that one out there.
Staying with politics, though, off of presidential stuff, just midterms in general, who do you guys got winning? Mark, I'll make you go first.
Well, I know Trump.
I need margin here because we're both going to say Dems by a mile.
So how are we measuring this? Total seats won?
Yeah.
Kim?
Yeah. No, majority. If you're saying they're getting the majority.
Well, of course I'm saying they're majority. Yeah.
Okay.
Trump
do they have a 5-seat majority, a 10-seat, a 20-seat, a 30-seat, a 40-seat, a 50-seat? What's the majority?
Trump's internal polling obviously is not good.
It's worse than the public polling. His internal polling is.
Because the reporter asked him the other day, and he basically conceded the midterms. It was hilarious to watch. He's like, well,
I saw Matt Gaetz on Tucker Carlson just barely, and Matt Gaetz said, I think it's going to be a Republican bloodbath. He's like, if Democrats were, this is Matt Gaetz, and he said, if Democrats weren't historically hated, they might rout us by 80.
Yeah.
Nobody's gonna excuse margin. Matt Gaetz for being anything other than pure MAGA.
I think final total, because so internal polling, just reading Trump, because it is very unprecedented for a president to basically say, yeah, we've lost. Doesn't matter how good a job he did, he's already trying to spin it. He's already trying to spin it that it
There's
just
just
isn't.
such a, taken outside of anything, there's just such a disadvantage going into midterm elections in the US. These politicians make outlandish promises. None of them ever get it done. And so in the midterms, America says, you made promises, you didn't keep them. And so this is how we're going to punish you.
Yeah,
And it happens
and I think
every single time
I
because
think
the number one mistake they make is the outlandish bullshit promises to get elected in the first place.
like, listen, I think healthcare is an issue that goes in the Dems column. I think Epstein is going to be an issue. Republicans handling of that. I think inflationary pressures on your average America. Let's go Dems 240, Republicans 195 is the final totals in the House. 45 seat majority for the
That's
Dems.
a historical
Interesting.
whooping.
That
So
would be.
Mhm.
Okay. Matt, any difference in that?
I honestly, I agree with Gates and I agree with Mark. There's just such like remove the politics and your personal opinions of it. There is just such a difficult uphill battle going
uh,
into midterm elections historically.
yeah, and Matt, it's just not that. I mean, around the globe, let's not forget last year. If you were a liberal around the world
You got
and you
demolished.
and you got demolished if you
You
were in
got
power. If
demolished.
you were a conservative
You won.
and you were in power, you also got demolished. It
Anybody
is
in power last year got beat up
anyone in power is getting punished in
because they
elections
thought
as a general rule. Modi in India's party, the Japan, it does UK, it does not matter, right? If you are in power until inflationary
until
residue,
this economic side of the equation is fixed, until you figure out an AI trade that actually helps common people.
your average person is
Yeah.
falling behind and they're going to take it out on whoever's in power.
The
And so
economy is absolutely, we talked about the market going up next year. Mark talked about it going down, but Mark talked about growth narratives, accommodated policy, and all of that, right? We're talking about trillions of dollars going into the market. And yet 70% of the American populace next year will be worse off than they were this year.
yeah, and so
Mhm.
it's not good. It's going to be a rout. It'd be
It's
shocking
it's
if
we
it
got to
wasn't.
fix it. We got to fix it. We got to stop just fixating on the top of the market as a country. Like I'm so sick of watching these heads of major corporations in America get an open invite to the White House when the lifeblood of America is not Meta, it's not Mark Zuckerberg, it's not Elon Musk. It is the small businesses of America that dominate labor. These companies that come into the White House, every one of them are laying off people. Every one of them are trying to increase profit margins. Every one of them are focused on efficiency. None of them care about the average American, their job, their family, their legacy, their heritage. And so, yeah, I would love nothing more than just get back to small businesses and, focus on the small business side of the equation. But that's not where our focus is right now. And so I see more small businesses struggling next year. I see more consumers struggling next year. And I see the rich getting richer and the poor getting poorer next year.
Hmm. So
That's
I
not a good
it,
environment to
that's
dominate the
not,
midterms.
yeah, but very fascinating analysis though, because obviously it's very disconnected with what the market can do because the market and politics, market and
Yeah.
real world are not always the same thing.
No.
So going back to your original analysis, market can go up and all these other things can still come to fruition because we've seen those things disconnect for a long
Tim, I
time.
think half of America lives in recession-like environments.
Hmm.
Half of America right now does.
Yeah.
So
Yeah.
you could talk about the market being like at the very top and the economy growing and GDP expansion. All of that is the AI trade, which impacts about the leadership of 20 companies in America right now.
Sure. Yeah. Yeah.
So,
Makes sense. Yeah.
yeah.
All right. So the actual margin is what we're going to measure this on next year.
I
Not that it
I I
matters, but
got
I'm a stickler.
Dems positive 25. I
Market 45.
Yeah, I think it's positive 25 on Dems. I don't think they have the historical bloodbath that some expect. Um, but if you were to take any of the elections this year, it would be 85.
Mm, okay. One last area of general, political conversation. Will China invade Taiwan? Matt, you're up first on this one.
I'm a simple no.
Mark?
No, but I like the poly market bet on 88 as a hedge against your portfolio. Like,
Okay.
listen, they just barely conducted over the last 24 to 48 hours full military exercise again. United States just, gave Taiwan the biggest military package ever. China's not very happy about that. If Matt, referring to what he said about 15, 20 minutes ago about America, let's stay in our Western hemisphere, China, you stay over there in yours. It's not an outlandish speculation, right? And it would be because of Taiwan semiconductor a real market risk. So it's something that
I want to rephrase something. It's not speculation. It was in an IMF document 10 years ago.
and so uh,
That's not
this
the Ethan. That's not the Tom Cruise IMF. That's the International Monetary Fund. Just wanted to clarify.
Yeah, and so it's a real risk, it's a real risk and it's a real scenario. Now, a- predicting whether any one country will invade another, that seems like it's a hard bet to say yes on, so I'll say no. But boy, you'd have gotten good odds on Venezuela 12 months ago, wouldn't you?
Yeah, you never know what the future holds, but I'm still an easy no. I think there's a lot of saber rattling right now. And I think, quite frankly, China's a little bit of a paper tiger. Um, we'll see if they actually have
If the
actions to
invasion
attack
was
it.
close, they wouldn't have held drills today.
No,
Right.
no.
Okay. All right. Off politics now.
I think they
One
held those
last.
drills simply because we sent them a very large military backing.
Yes,
So, yeah,
Right.
a lot of
Right.
show.
it was a message.
Okay, last night I saw my Chicago Bears get beat, but they're actually going to be making these playoffs and a Super Bowl candidate. We're going to have one last topic, and we're going to pivot from politics onto sports. And the Super Bowl for this year will be in February 2026. Who is your winner? Mark, I'm going to make you go
I'm
first.
going to pick the team that would cause the most amount of pain to the most amount of people, and I'm going to predict the New England Patriots will win the
Dagger
Super
in my
Bowl.
heart there.
No, and not just yours, bro. That would cause the most amount of pain and the most amount
The
of people.
Patriots can't go from 20 years of domination. They lose Tom Brady for 5, and all of a sudden they're right back there. Like
Yeah,
I can't do that.
But their
well,
coach and quarterback are likable, like very likable people.
I
so New England
I
Patriots
don't
is
have a negative thing to say about their organization.
plus they play the Dolphins this week to lock up the home field advantage, which would be a big, huge. Listen, there's one of the reasons. Hey,
Dolphins get
Belichick
up
was
for Pats games. I'm just warning you.
Listen, you have to go to New England twice, in January. There's a reason New England did so well for all those years, right?
Mhm.
That's a tough place to win in January. So I'm going to go New England Patriots.
I
Okay,
can't like that. That quarterback is so stinking good.
he's good.
Um, it's a good pick. It's a good pick. I'll never do it, but it is a good pick. I'm gonna stay in division though. And I'm gonna go with the Bills.
Oh, wow.
They got the Cook running back is one of the best in the game. And Josh Allen, I just have so much respect for Josh Allen, like
You
a
love Josh
ton
Allen.
of respect for Josh Allen. And so I'm gonna say the Bills, and I don't think they're gonna get the one spot, but I think if anybody can go to New England and beat New England
Guys, it
in
would be.
January, it would be the team from Buffalo.
Yeah,
Hmm.
yeah, that would
God, it
be
makes me want to
interesting. I
watch
mean,
the
they just had a
playoffs right
battle
now.
just
Hmm.
yesterday.
Yeah.
So you guys are going AFC.
Although I'm gonna say in the NFC, Tim,
Stop.
I'm gonna go
Don't
with the
jinx us.
Bears.
Don't do it.
I know
Don't
you
do
don't
it.
want it. I know you don't want it. I just knocked on some wood. I I I like the Rams. I just can't get there on the Hawks.
I'm
Although
going to be
I would
rooting for Sam
love the
Darnold.
Hawks for Sylvia. I love San Francisco for Davy. But I, I that Bears team is just fun. They are.
They are fun.
They're just a fun
Yeah.
team from their rookie tight end standing out to Caleb Williams taking a step up this year to wide receivers that actually are legitimate wide receivers. Finally, Tim, you have legitimate wide receivers. And a defense that did not look great last night, but has played pretty decent ball. So I'm going to go wild card, and because they are going to be a wild card, more than likely. Um,
Mhm.
I'm gonna go with the Bears. The Bears play the Bills, and the Bills win 34-31.
I would take it. I would take it. Better than that 40-7 drumming that the Patriot or the Colts
You
gave
never
us in
had a chance.
2006.
You never
No,
had a chance.
Hester took the opening kickoff back for a touchdown. It was glorious. It was five
And the
minutes
Colts
of,
never
oh
worried.
my God, we have a chance. And then Peyton Manning dinked and dimed us for 40 points in a row.
Yep.
Marky, NFC pick, you want to make one? You're just going to stay with
I'm going
Patriots
to, listen,
dominate.
I have not watched as much football as I would like to this year, but I did catch the Seahawks Rams game
That was a great
from a
game.
few weeks ago. I mean, if you're going to watch not much football, that was a good one to actually watch.
It was equivalent to the Bears game last night. It
Yeah,
was
it
fun.
was, and so I'm going to pick Seattle. I thought they showed something that game, and it might be a hard pick because everyone hates Sam Darnold. Nobody likes him.
Seahawks
So,
fans don't hate Sam Darnold right now.
and
Who
so,
hates Sam
Like,
Darnold?
I don't,
okay,
why
let
would
me
you hate Sam
rephrase.
Darnold? I don't
Nobody
get this.
respects. Nobody thinks Sam
I
Darnold can
respect a
win anything.
journeyman who got
That's
canned by everybody else, and
No,
finally he's like, "Yeah, you guys gave up on me
go
too soon." How do you not respect that? Like,
go look at the
it's
everybody
odds.
just
loves
nobody.
Go
Like,
look at the
everybody loves
odds.
Sam Darnold.
Go look at the
No,
betting
I didn't know
odds.
anybody hated
that
Sam Darnold.
The
time
betting
out.
odds hates Sam Darnold.
Your maybe, but your analysis comes from like USC hate being drafted third, a top pick, all that stuff. All of the resurgence, comeback kid,
I love the
left for
comeback
dead.
story.
It
I'm
fell
talking
on
about
like four
actual
different
betting
teams.
odds. Do not give him much respect at all.
All right, all
Do
Well,
right.
not give Seattle much
they were
respect at all.
probably very, very wrong this year. Then,
They have been wrong.
Yeah.
then maybe since they've been so historically wrong, maybe don't sign them.
But that's the betting odds. It's Vegas.
So you're going with the Seahawks or the
I'm going to
Rams?
go with the
Which one?
Seahawks, but then I'm going to go with New England beating them. I don't know if that would be the most entertaining Super Bowl from a rating
Are you
standpoint.
kidding me? That is the scene of one of the greatest, weirdest endings of Super Bowl history.
Oh, that is true. That is true.
When they didn't hand off to
Marshawn Lynch.
Marshawn Lynch, and they threw
Yeah.
the pick to the Patriots guy,
At the one,
yeah,
that was a crazy game.
that
That
was
was a wild,
that was
crazy game.
crazy. So that would
Yeah,
be
it
a
would be a
good
good
Super Bowl matchup.
Listen, I'm gonna just try to unjinx my Bears right now, and I'm gonna pick somebody else. I'm gonna pick the Rams. I think Matthew Stafford has one more stretch in
Puka's
him,
unreal.
and Puka is unbelievable.
BYU stud
And
right there, Puka.
why don't we go Mountain West love and show my Broncos some love? Rams, Broncos. Here we go. Top of the
That would be a
ticket.
good
Let's
Super
go.
Bowl too, Rams Broncos.
Yeah, would be a lot of fun. Coach Frankie would enjoy that quite a bit.
Oh yeah. Oh yeah.
All right, guys. Well, the picks are in the book. We'll come back next year, and you guys will forget all of what you actually said, and we're going to have to remind you. Have to dig up the recording, go back and try to remember it all.
I guarantee
But a
in
lot of
10
fun
months from
today.
now, when somebody says, "Do you remember what your predictions were?" I'm like, can somebody go find them?
It's-
I know I had the
somebody tell
market
me.
up and gold
Somebody
up and
say it.
silver up, but
Yeah.
The
All
only one
right.
I'll remember is Bitcoin 150.
I'll definitely remember your ES at 6,800.
Yeah,
Yeah.
and Bitcoin 150, I'll remember that for sure. Oil, I don't know if we'll remember it, but we'll see.
I've
We'll
already
see what's
forgotten
gonna
what I
happen.
said on oil.
What do we say about
Yeah,
oil?
what,
All right,
82?
couple
Did I
things I
say
want to
82?
drop here before we end the show. Matt, end of the year, happy new year to all of our audience out there. They're the reason why we keep coming back and doing this each and every year. We have another event here tonight at Tackle Trading, which people listening to the podcast can go watch the replay on. It's an AMA for all the coaches in a coaching panel. But Matt, we have all kinds of live events and all kinds of different things. Just pitch tackle trading in general. I know that people can get promotional holiday pricing for stuff that we're doing over there for a limited time. So
Yeah,
what do you want to talk about?
we got about 10 days left in our annual holiday season during the Christmas seasonality. And if you're looking for an awesome community to call home that you're going to navigate with a bunch of amazing traders and investors next year, come to Tackle Trading. You test out, get a free trial. You can get an annual membership on a 40% discount. So we're having a lot of specials from an education and a subscription perspective at Tackle Trading. We also have two more events in our holiday season that we like to affectionately call education season at Tackle Trading. And that starts tonight with the coaching panel AMA. That is a Ask Me Anything moment where I believe we got about 25 questions from our community so far, all very good, from trade management to risk management to mindset to early journey to systems to macro, you name it. It's going to be a fun event later on tonight. Obviously, when you watch this podcast, we've already done that event. But here's the beautiful thing. We put those recordings on the same link. You can get the link in the description below. It's the live events page. And if you're on upcoming live sessions, that's where you can register for either session we ever do. But if you come over here to where it says watch the replay, you can see the replay of all the webinars we have done throughout the education season at Tackle Trading. So I'm looking forward to an awesome last 10 days in the education season at Tackle Trading. But it's the best community in America. And that's just not me saying it. That's according to Trustpilot. We are the highest rated financial education company in America because we will work with you until you find your success, period, end of sentence. So come check it out. Come have some fun, and let's make 2026 the absolute best year of all time.
100%. Love it. Thanks, guys, for your predictions today. Thanks for having a lot of fun with us. Audience out there, make sure that you do like, subscribe, and follow this podcast on any of your favorite channels. But do me a solid if you can and recommend it to a friend. One of the ways that we've grown Tackle Trading and made us the top rated company is just by good old-fashioned referrals, good old-fashioned people, and really making connections and community a big part of what we do over here. So give us a referral out there, and that would be awesome. Until next time, guys, have a wonderful week and Happy New Year.